let me write the heading over here, that is related to the time value of money. Now, just answer me one thing. If you're having rupees 10 lakh in your hand right now, in this year 2021, you're having 10 lakh rupees in your hand, and further you're getting 10 lakh rupees in year 2025. Is it worth same? Is it worth the same? Kindly please do answer at the earliest. If you're having rupees 10 lakh in your pocket right now, in your bank account right now, or 10 lakhs in year 2025, would it be the same? Kindly please do answer at the earliest. I want you all to answer so as to understand the concept of time value of money. No, it is not the same. It is not the same because there is a factor related to what? It is related to the factor of inflation. Inflation factor is also there. Inflation factor is also playing the role. So basically inflation does what? It will basically reduce your purchasing power. It will reduce your purchasing power. So day by day there is basically inflation is increasing, the prices are being increased, and further also you are having the opportunity in your hand right now. If you are having rupees 10 lakh in your hand right now, you can do invest the amount. You can do invest the amount somewhere and you can do earn additional return over it. Okay, so we can say that in future the same amount will not be having the same value, now let us take the case that you are going to invest in some project, and further you are investing at the time being, let us say for this particular 1 year, first year you invested rupees 2 lakh over here, and further over the second year, third year, fourth year, fifth year and sixth year, you received the different inflows. You basically received the different cash flows, and those cash flows were worth rupees 40,000 each. 40,000 each, and further in the last year you basically received an amount of 80,000. You received an amount of 80,000. Now, would you be investing in this particular investment? Kindly please do answer at the earliest. Would you be investing in this investment? Yes or no? So you are basically investing rupees 2 lakh right now, and further for each and every year you are receiving 40,000 each, and on the time of maturity you are receiving 80,000 from the investment itself. So would it be appreciable so as to invest into this investment or not? No. Before we look into that, we need to look into 2 or 3 factors. What are those factors? First of all, what would be the return? What would be the return? And ultimately we also need to have some common point where we can do match that what we are getting. Okay, I already told you that money in hand is not equal to the future amount of money that you are getting after some time. Okay, so those are not equivalent. So if we are adding up this amount of money, that is 80,000, 40,000, 40,000 each, and that will be basically amounting to what? That will be amounting to 2,40,000. That will be amounting to 2,40,000. That seems to be that you are getting a higher amount, but it may be the case that there are another factors too now. As I already told you that inflation is playing its role, and also you are having the opportunity cost right now, so you must be discounting the future flows value to some present value. Okay, so there comes the criteria related to the present value, there comes the criteria related to time value of money, that being with the time the money is changing its value. And if we want to conclude that we must be investing in this particular investment or not, we must be looking at the factor that is the investment would be positive for us or will be negative for us. How we can do conclude that? We will be basically converting each and every of the future cash flows, future inflows, to the some specific value point or some to some reference point over here. So we will be covering this all the values to the present value. Okay, so we will be covering each and every inflow value to the present value over here, so as to conclude that the investments are basically worthful or not. Okay, so let us take the case that the market yield is available at 12%. Market yield is available at 12%. We just assumed that the market is basically, if we are investing right now, we are getting 12% of the return. So this is an opportunity cost, and further we must be discounting all the future values at this particular discount rate. So this would be the discount rate. Now what is discount rate actually? Discount rate is that particular rate at which we calculate the present value. We calculate the present value of the cash flow. Now, whenever I use the term cash flow, it basically comprising of both the terms, that is a cash inflow and cash outflow. What do you mean by cash outflow? Cash outflow means when it is going from your side. Let us take the case I invested rupees 2 lakh. In that case, I am basically investing the money. It is going away from me now. It is going away. It is going outside. So it is basically what? It is cash outflow. And when I say I'll be getting the returns 40,000 each for each year, that is basically related to what? That is related to the cash inflow. That is related to the cash inflow over here. Okay, so whenever I say cash flow, it is comprising both the terms cash inflow and cash outflow. And further, I'll be just looking at the factor that present value of these inflows is equal to my investments at particular time being or not. Okay, so if these values, if the inflows values are present value is not equal to or lesser than that of the cash investment, the investment which I made, that is amounting 2 lakh rupees over here, in that case I must not be investing in this particular investment. In that case I must not be investing in this particular investment. Is that clear? Part clear over here? So first point that I wanted you to understand, that is related to that money is having its value and it is changing with time. So money right now in hand is not equal to the money that I'll be having in future. So we must be discounting the future value to some reference value so as to make it understandable, so as to not make the condition ambiguous that we can invest in this particular project or not. Okay, so that is related to it. Now there comes a concept related to the positive cash flow and the negative cash flow. What do you mean by the positive cash flow? I already told you, related to the cash flows, that is a cash inflow or cash outflow it may be. Now what is positive cash flow and what is negative cash flow? What do you mean by the cash flow? When a firm receives cash, the cash, it is said to be what? It is said to be the inflow. It is said to be the cash inflow. So when I am receiving the amount, it is said to be what? It is said to be the inflow. It is said to be the inflow. And further it is a positive cash flow. It is a positive cash flow because I am receiving the amount. Okay. And when it is negative cash flow, when basically we are paying the amount, it is said to be outflow. It is said to be outflow. And when we are paying the amount, we are making the payments now. So that is what related to. Actually, it is negative cash flow. It is negative cash flow. So inflows are to be basically shown with the positive sign. So whensoever we will be indicating the inflow, we will be basically putting a positive sign, or we will be writing it as it is. But when we are basically relating to the cash outflows, we will be using the negative sign along with it. Is that clear? So when I just draw it on the timeline, if I say I just invested 2 lakh rupees, I'll be just putting a minus sign against it. That is basically I have paid the amount. And when I say that positive 40,000, it means what? I just received this amount. That is a cash inflow, and this is related to cash outflow. Is that clear? Is this particular part clear over here? Now let us have a look at the factor that how we can calculate the present value. Present value over here. So present value, how we will be calculating it? Let us have a look at it. Let us take the case that there is an amount that you basically lent to your friend, and today's scenario in 2021, you just lent an amount amounting rupees 10,000. You lent an amount rupees 10,000. That was I just used a negative sign over here. So it is what? It is a negative sign, means what? It's a cash outflow. Now in 2022, my friend returned 6,000 rupees to me. He returned 6,000 rupees to me. And in 2023, I'm expecting that he will be returning the rest of the amount along with the interest. Let us take the case he paid me 5,000 rupees in year 2023. And let us take the case that the discount rate or the market rate is 12%. It is 12% in this case. Now how we will be calculating the present value of these inflows? So let me tell you again. So over here, 6,000 present value. So the discounting factor formula, what is the discount factor formula? It is basically discounting factor is equal to 1 divided by 1 plus R, that is a discounting rate, raised to power n, that is basically number of years. That is basically frequency, or we can say number of years. Okay, in simpler terms you can say number of years, otherwise it is related to frequency over here. Okay, so now our friend is returning money after 1 year. In that case n will be equal to 1. Where our friend is returning money after 2 years, that will be their n will be equal to 2. There the n will be equal to 2. So discounting factor for the year 2022, it will be equal to 1 divided by 1 plus, converting the 12% to the decimal part, that is 0.12. 0.12 raised to power 1. So it will be equal to 1 divided by 1.12. So it will be equal to 1 divided by 1.12. Is it clear? So over here, if we want to get the present value, we must be multiplying the cash flow value. We multiplying the cash flow value with the discounting factor. With the discounting factor, that is 1 divided by 1 plus r raised to power n. So this is the formula related to, or we can simply write c divided by 1 plus r raised to power n. That is the formula related to the present value of the cash inflows or cash outflows. Okay, so if it is cash outflow, there will be negative sign with the c over here. Okay, that is representing what? That is representing the cash outflow. And in the case of the cash inflow, it is written as such, that is with the positive sign over here. So for 6,000 value, it will be rewritten as 6,000 divided by 1.12 raised to power 1. Raised to power 1. This is how we will be calculating the present value over here. This is how we will be calculating the present value over here. Now on the simple calculator, we can easily calculate it. That will be equal to 6,000 divided by 1.12. That is equal to what? That is equal to 5357. So the present value over here, it is equal to 5357.14. And for the second inflow, that is for rupees 5,000, it is being returned to us after a period of 2 years now. So over here it will be 1.12 raised to power 2. So we can calculate it simply as 5,000 divided by 1.12 and further divided by 1.12 again. So it will be equal to what? It is equal to 3985. It is equal to 3985.96. Now, was it beneficial for us so as to lend the money? Can you please do answer me? So we'll be adding up both the inflows over here. So it is equal to 3985.96 plus 5357.14. So it is amounting to 9343, whereas the amount lent by us was equal to 10,000 rupees. Whereas the amount lent by us was equal to rupees 10,000. Now kindly please do answer at the earliest. Was it beneficial so as to lend the money over here or not? Was it beneficial to lend the money over here? Yes or no? Kindly please do answer me at the earliest. So kindly do answer me at the earliest. Was it beneficial over here so as to lend the money? Yes or no? Definitely not. Definitely not, where we just basically invested the money amounting rupees 10,000 and we further the amount which was received by us, it is just 9343. It is not even covering our investments. So it was basically not basically a positive investment, or we can say that we must not be investing amount into this. Okay, but friend ko mana kaun kare? Okay, so that is not related to the ABM itself and not related to the time value of the money itself. That is a concept between you and your friendship. Okay, now here we learned the concept related to discounting. Now what actually the discounting is? So it is a process. By which whatever the future cash flow. So the term, it is basically what? It is a future cash flow. So whatsoever the future cash flows, those were to be received by you or those were to be paid by you, you basically adjusted according to their present value. So that we could basically use it, so that we could basically compare it with the present values itself. So whatsoever the amount that is being invested by us right now, we'll be comparing it with this particular amount that is basically related to what? That is related to the discounting part over here. Is that clear? So that is related to what? That is related to the discounting over here. And further, let me explain it with you an example. Let us take the case that in year 2021, there is a town named ABC where the population is 1 million, where the present population is 1 million, and for the growth rate of the population is 5%. The population is growing at a rate of 5%, and we need to calculate the population 5 years ahead. We need to calculate the population 5 years ahead. Now you learned the concept right now that is related to discounting, that whatsoever the future value that we can discount it to the present value, but what it related with, that we want to calculate the future value from the present value. We need to calculate the future value from the present value. Now if you want to calculate the future value from the present value, you need to add up something now, because you are earning over it. In this particular case, we are basically discussing the case related to population, so we are basically saying it a growth. We are saying it a growth, that population is growing at this particular percentage or this particular rate itself. Otherwise, in terms of money, if I am having rupees 5,000 in my hand right now and I just invested it in a SIP, invested in a SIP, which is basically quite done right now. I'm talking about FD. Let us just leave the issue related to the stock market or the mutual funds. Let us talk about the FDR. That is the safest over here. So I just invested my rupees 5,000 in the FDR for 10 years. For the 10 long years, I'm just investing my money. Now, if I want to calculate the future value and there is a single cash flow related to it, and further there is compounding. It is compounding now, because each and every year, if the interest is compounded yearly, in that case, after 1 year, the amount will not be equal to 5,000. It will be something different. If I take the case that the interest rate is 10%, after 1 year, the amount would be equal to what? Amount would be 5,500. And for the next year, the interest will be paid on not 5,000, it will be paid on 5,500. It will be paid on 5,500. That is a compounding part. So in this case also, if we need to calculate the population 5 years hence, if we need to calculate the population 5 years ahead, in that case we will be using the concept related to compounding. Okay, so if we want to calculate the population ahead, how we can calculate? Kindly please do answer at the list. What is the formula related to it? Compounding interest formula is quite simpler now. You must have already read it. What it is? It is equal to, what is the compounding formula? It is equal to A is equal to P into 1 plus R raised to power N. 1 plus R raised to power N. So when we were to calculate the present value, we look at the present value, we basically divided the 1 plus R over here with the A term over here. And when we are calculating the ahead value, that is a future value, we multiplied it with the present value itself. That is easier to understand now. That is easier to understand that how we can calculate the value ahead. Okay, compounding factor over here. So if the population is growing each year at 5% and we need to calculate the amount of the population or the population number after 5 years, that will be basically equal to, we are having 10 lakh of the population right now. That is a 1 million. 1 million means 10 lakh of the population right now, and 1 plus R means 1.05. We converted the percentage part or R to the decimal part over here, that is 1.05, and raised to power 5 over here, and raised to power 5 over here, and we will be simply calculating it. That would be quite simpler so as to calculate it, and we can answer the question over here. So it will be 1.05 multiplied by 1.05 multiplied by 1.05 multiplied by 1.05 again, and 1.05 again. Actually, there was some issue in my calculator right now. That is why I'm not able to just press the equal to sign and calculate it. So otherwise, it is quite simpler so as to calculate with the simple calculator. So it will be equal to 1.05 raised to power 5 is equal to 1.27628 multiplied by 10 lakh. So it will be 1, 2, 3, and it will be equal to 1276281. So that will be the population after 5 years. That is going to be the population after the 5 years. After 5 years, the population will be 1276281. Okay, is that clear? That is related to what? That is related to compounding. Now, simple question, same question. If I want to calculate the population 3 years ago, if I want to calculate the populations of 3 years ago, 2019 and 18, if I want to calculate the population in 2018, that is 3 years ago, how can I be calculating the population over here? How can I be calculating the population 3 years ago? Is it possible over here to calculate the population 3 years ago? Yes or no? Can you please do answer at me earliest? Is it possible so as to calculate the population 3 years ago? Definitely it is possible. If I've asked you the question, why would I be asking something to you that is not possible? Okay, so definitely it's possible, but you need to calculate it. You need to get an idea that how we can calculate. Right now you're having the population related to year 2021. You're having the population 2021, and further you will be doing what? You will be basically, you need to calculate the, you will be calculating the P over here now. You are also already provided with the A over here. If we look at this particular equation over here, if we consider that we need to calculate the present population, not present population, but the population in 2018, definitely we can calculate it. Over here, we are having the population equal to 10 lakh. Right now we are having the population equal to 10 lakh, and further we'll be dividing it with the 1 plus r raised to power n, that is 1.05 raised to power 3. That is how you can do calculate the population 3 years ago. Isn't it clear? So this is the concept related to compounding and discounting. So it will be 10 lakh divided by 1.05 divided by 1.05 again divided by 1.05 again. So that will be equal to 86383. That would be equal to 86383.7. So that would be the answer related to it, and that is how you can calculate the population 3 years ago and after 5 years. So if this type of questions are asked to you, you must not be making a mistake related to it. You must be understanding this is not related to annuity, because annuity is a special case of the compounding, and further this is not related to compounding where you are having the different inflows. Where you are having the different inflows, it is not related to the annuities over here. Is that clear?